You ready for today's episode?
I'm ready for the episode. I don't know what we're talking about, so you tell me.
Yeah, well, I'm going to switch it up on you a little bit. I'm going to throw a little curveball at you. We're just going to have a little fun today, and we're just going to go a little off topic.
Okay. All right. Off topic's good. I think this will be good. Yeah. We'll see what we end up talking about.
All right. So, in our industry, I don't know if there's another industry like this or not. You can maybe give me some feedback on this, but there's a lot of information and a lot of different perspectives on things that are thrown at people from an investment perspective, like on a daily basis. Like, we are completely bombarded with information. Number one, there's information everywhere about investments. And then there's so many different perspectives and there's so many different predictions, like what the market's going to do. And it makes our jobs so difficult to manage all that. Can you think of another profession like that where there's just everybody's got an opinion and they don't have to hold themselves accountable to that opinion?
Yeah, I guess I don't know. My lack of quick wit is maybe preventing me from coming up with another good example. But I've thought about this a lot in the past, and it's so true. There's so many different opinions, so many different perspectives, and data can be used to tell so many different stories in our industry. And I think, at least as I've thought about it in the past, one of the main contributors that I see to this phenomenon is this kind of ambiguity between financial markets, or in kind of understanding financial markets. Is this an art? Is this a science? Is it a blend of the two? And if so, to what extent is it one versus the other? And I think on the surface, it's tempting because, if we're looking at kind of economics and kind of economic data and that sort of thing, it's tempting to want to think of, business and economics as a science, as a hard science. Like, we have a set of laws and theories that we can prove kind of repeatedly over time. And that's the temptation to want to understand markets in this way. The fact of the matter is, it's not a science. It's not like a hard science, right? I mean, economics is a social science at the end of the day. And, business in many ways is a social science. So this isn't something that's we can test hypotheses and then we will kind of prove them repeatedly in the future based on our understanding of how things work. There's still human nature and human behavior in the mix that's unpredictable, irrational.
You're right. There is human behavior in the mix. And science is a little hard for me because science, like you just mentioned, is hypothesis. You have a hypothesis about something and then you have to prove it and then you have to reprove it. And then information changes and then you have to reprove it all the time. So to me, it's that's what investing is. It's there is a science behind it, but I don't know if it's ever been proven. People have all these hypotheses on what may or may not happen. And then they try and prove them over time with the data that you mentioned. But it's still unproven.
Yeah, it's like your hypothesis and your understanding of how something works will lead you to understand with a very high degree of certainty that what's going to happen next. And then that's really where we run into some issues when we're trying to understand markets, because we can gather all the evidence that we can and all the data that we can to try and understand how have markets work so that we can gain some sort of insight onto how they're going to work in the future. But that degree of certainty is much lower. So there's still a lot of kind of randomness in future outcomes when we look at how markets behave. We can pick up on general trends. I think you just look at, say, the difference in returns over time between stocks and bonds. If we get all the data that we can get our hands on, I mean, it's still a relatively, we can't go back that far to get really good data. We can say with some degree of confidence that stocks are going to do better than bonds over time. But like, if you really look at the numbers, like that degree of confidence isn't as high as you would like it to be. It's nowhere near what you would want it to be if this were a hard science.
Yeah, in what is markets, essentially it's buyers and sellers coming together to pay a price for something based on information that is constantly changing at just phenomenal speeds.
Yeah, no, exactly. I mean, and like, and you just look at in trying to understand markets, how markets have operated. I mean, their function is essentially the same, bringing buyers and sellers together to identify prices, essentially. But if you look back at kind of the access to information 100 years ago versus access to information today, it's just, I mean, unfathomably different. And so like so markets are still doing the same thing, but they're doing them in a different way.
Yeah.
So, I mean, that also contributes to kind of how we can expect to what our experience as investors is going to be participating in markets.
Yeah. So were you around when all the quotes, I mean, you're younger than I am, so I don't know if you had to go to the Wall Street Journal to get quotes on stocks, or were you already
No, it's funny.
Internet?
No, I remember like distinctly, like, so I guess I was probably about 10 or 11, and in the family we were looking at a particular stock, and we would check the paper every day.
Yeah.
And like we're just like, okay, you scroll down and like check the price, and so yeah, I mean, like it's not a core of my investment experience, but like I do remember those days. And,
Yeah.
like, we did that. So.
Oh, that's sort of when I started. It was like sort of that period when things were changing and you were just going from like information be accessible in a newspaper for stock price first, constantly in your face and so forth. But I guess what I really wanted to do, somebody sent me this video, a John Oliver video, and it's sort of this thing. He's sort of riding Kramer a little bit for some market predictions. But I wanted to talk about like in the media, in the news, on TV, on TikTok now, on Instagram, just trying to decipher like what is entertainment in terms of investment advice. Well, it's not even investment advice. What is entertainment and what is investment advice? So what we're just going to go through this video and we're just going to look at it and just discuss it.
Yeah, for sure. I mean, you got some examples?
Yeah, well, the video has a bunch of examples, So this is basically John Oliver, and he's looking at different returns and different predictions, and it's kind of funny. So I just thought we'd try it and run through it real quick. So,
okay,
you ready?
Great. Yeah, I'm ready.
I'm absolutely not saying that we should get rid of crypto entirely. It could eventually be useful. Maybe the third time that we talk about it, we'll all be using a digital coin to buy everything. I doubt it, but I can't predict the future after all. I'm no Jim Cramer. But we should recognize that right now, the main thing you can really do with crypto is gamble with more crypto. This is all still a casino. So if you do want to invest, do your own due diligence, never put in more than you can afford to lose, and if you ever see someone doing this, run.
Right. So crypto, I mean, let's just start there. I mean, it's just been crazy over the last several years. There's all kind of predictions. I mean, it's talked about, and then you have like these companies that are selling crypto just dissolve and people's monies are gone. I mean, what is that?
I don't know. There's a lot to talk about there. It's mostly noise. I mean, the vast majority of the crypto conversation is noise. And the vast majority of crypto conversation is going to lead folks, if they're going to act on this information, to make poor decisions.
Well, it might be a good decision. People have made money off crypto, but it boils down to what I think we're going to see play out in this video is buying something at a price that is favorable to you, buying it low, and then selling it at the appropriate time and making these decisions constantly.
I mean, yeah. And I think, when it comes to crypto, what's affecting prices, it's entirely speculative. It's entirely it's a bet on, it's a popularity contest in so many different ways.
Yeah.
So, I mean, the arguments have been made over and over again to try and validate the prices that are being set in crypto markets, saying that, okay, here's the actual value of, this particular cryptocurrency or token, and the price that's being set reflects the value. But at the same time, like, those arguments, they're honestly few and far between. And they're really kind of built on, it's like a house of cards.
Right. So it's the new hot thing that people are chasing around. They're trying to make money. And so crypto, it's one thing. Let's move on a little bit. I'm going to hit play.
Okay.
And now, a look at a few more of Jim Cramer's great calls.
Could this be the future of preventive medicine? Let's take a closer look with Elizabeth Holmes. To me, it's reasonable to compare you, I usually don't do this, to Steve Jobs and what he did for computing.
So then we not only have like new products, we have new gurus. I think what Elizabeth Holmes just went to jail, right?
Yes. Yes.
Yeah, she just
Convicted of fraud.
Yeah. So here is this extremely popular TV show and this executive that's doing really, really well. And she's the next Steve Jobs, now in jail.
Yeah. Convicted of fraud. I mean, she fooled a lot of people.
Yeah. I mean, so, but that's just, to me, that's just entertainment. That's just like the next hot thing, just like crypto. You got the next hot advisor, you got the next guru, you got the next thing. And these things to me seem to just fall off the cliff at some point in time in terms of people chasing them around.
No, they absolutely do it. I mean, if you just kind of, I don't know, maybe it's the opportune time to talk about a couple of things that I see contributing consistently to these types of stories. I mean, number one, it's fear of missing out.
Yeah.
And number two, it's the incentive of the storyteller, right? So if you have someone giving you a message and say it's Jim Cramer on CNBC, what's the point of Jim Cramer's show?
Entertainment.
The point of Jim Cramer's show, it's entertainment,
Yeah.
100%. And it's entertainment to keep people captivated, to keep people engaged, viewers, who then view the advertising. So CNBC it's a business. It's operated as a business. They rely on advertising revenue.
Jake,
Entertainment is full-time for
you know that.
advertising.
I know that. Have you ever gotten a call from a client that says, hey, I saw this on Cramer and I think I want to buy this stock?
I have not personally gotten,
I have. There's people out there that watch this stuff and they don't see it as entertainment, And so these things, to me, that's what we're trying to distinguish. What is entertainment and what is truly advice, So,
well, Ryan, what keeps people entertained? Are we playing on our rational thought, or are we playing on our emotions?
we're playing on our emotions, obviously. But this is like people's livelihoods. I'm getting a little excited here. This is like people's livelihoods that we're talking about. And we have these people promoting other people that don't necessarily make sense. All right. So we got crypto, we got the next guru or the next big company or the next Steve Jobs. Let's see what else we got.
The ninth best performer year to date is SVB Financial, don't you want? This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. I think the fears were not justified, and it's a very compelling situation.
So SVB.
Yeah.
What did he just say? Wall Street's overly concerned about this? Mistakenly concerned.
And yeah, essentially. So Jim Cramer's talking about Silicon Valley Bank, and he's pointing to it as an investment opportunity, and that the fears on SVB's balance sheet are overblown, and it's a compelling buy opportunity.
Is anybody?
But he had a cool chart.
What?
But he had a cool chart.
He did have a cool chart. So, like, these predictions and these theories can be wrong. And so there's people out there that took that advice that went and made that purchase out there for SVB, and they're hurting because of it. So, all right, let's go to the next one, see what we got. So SVB collapsed 30 days after he made that claim.
Zoom video.
Yeah.
What can I say? This is their economy, the Zoom economy. It's the greatest story I've seen since the dawn of the personal computer.
Zoom. So that prediction, and Zoom is a super popular stock, like, and a super popular product because of the pandemic that we all had to sort of utilize. And
Yeah.
again, not trying to write Kramer or anything, but somebody makes a prediction about it. It sounds super reasonable to me. Like, why would you not buy Zoom?
Yeah. Right.
And then, it falls 80% starting after he makes that prediction.
I mean, 3 of the stories that we've looked at, they relate directly to emerging technologies. And I think when you look at life-changing types of investment returns, you can grab a handful of stories. If you take into account what's happened in the past, you can grab a handful of stories where if you'd invested at the right time in the right emerging technology, if you'd placed the right bet, you'd made the right gamble, essentially. Because when we're looking at emerging industries and emerging technologies, there are so many players in the space, all competing to come out on top. And it's usually only a handful of those companies that actually find the success that leads to these life-changing types of returns. But is this fear of missing out, right? I mean, and I think Zoom's an interesting one because it had become part of our everyday life for so many people, during the pandemic. So there was this direct connection to, okay, I'm using this. I know it. I feel like I understand it. It's an emerging technology. It's kind of an emerging new, social dynamic. This is going to be part of the world in the future. I'm going all in. This is, going to be a life-changing investment.
Does you knowing a product or a company make it a good investment? What is that?
Well, I mean, Peter Lynch is going to tell you that, invest in what you know. And I think that's part of the noise that's out there, right? I mean, you have successful, investors who say, okay, invest in what you know. But to what extent do you really know? I think that's the real question. Are you committed in a disciplined and serious way to actually understanding what you're investing in to the point where you can confidently say, I know this, and I know something that the rest of the market doesn't know? Because again, markets are information processing machines, bringing buyers and sellers together to set prices. So at any point in time, the market has set the price based on all the information that's out there. And so you have to say as an investor, actually, I know this better than I know. I'm going to pit my knowledge against that of everybody else in the marketplace. And you know what? I'm right.
So you might be right at that one specific time, but I mean, that's one specific time. You go out into the future and anything can happen. Like you just you run into a pandemic, or you run into, an SVB collapse, or you run into inflation, and these things just change so quickly. So yeah, Zoom, we're all using it. But that's sort of built into the prices right away, and the stock goes up significantly once everybody's utilizing it, and it's a well-known fact. It's not the right time necessarily to invest in something.
Yeah, I mean, and you think about it, okay, if you're going to adopt this as an investment strategy for life, you're going to attempt to kind of outguess the market, the information that's being processed into the market persistently over time. I mean, maybe you do it once, right? And that leads you to this kind of overconfidence that, oh, I did it once, and you know what? I can do it over and over again.
There's a saying,
There's
right?
a version of the meme.
Like getting it right once is the worst thing that can happen.
It is in a lot of ways, right?
Yeah. So let's move
Was it
on.
random luck or was it disciplined skill?
Bear Stearns. Yeah, it was. Now it's great branding, great investment banking. And then turn the button over.
Bear Stearns. That was a good one. I mean, we all know that one. I didn't realize that he made that prediction right before it happened. What was it? 2 months before?
2 months.
2 months before. Yeah. All right. So we all know that story. Let's move on.
Ukraine, they have army, but that army's going to be overrun, within the first 2 hours.
So we're off companies for a second. So he made a prediction about what happened to Ukraine.
Hey Jim, you're pretty smart at this investment thing. You're really smart at taxes. I need surgery on my finger. Can you operate on my finger too?
I would love to operate on your finger, Jake.
You seem really smart at this one thing. Can you also apply your intelligence to something completely different?
There's nothing I love more than getting a splinter out of my kid's finger. Like that's like the best thing for me because they're miserable and they hate it. You got to go in there and you feel like a doctor. You feel good about it though. You feel like you know something and you can do something. But I get your point. I do sort of would like to think that I could operate on something, but there would be a ton of knowledge I would need to be able to do that. Forgive me. So.
Yeah, probably like a lifetime of learning and education, going to medical school and practicing on lots of other patients before I let you operate on my finger. I'd like, it's one of these kind of truisms in just the way we're wired as human beings. If we find success in something, if we find ourselves, we've committed to learning something, we have an understanding, we've kind of recognized, okay, I can do this. But then we're just tempted as human beings saying, you know what? I did this. It was hard. I can also do this, even though it's hard. And like in that, Jim Cramer's talking about military strategy. He's talking about things way outside of his kind of circle of competence, if you will. And
everybody makes predictions about that. It's not only him. It's like it's everywhere.
But this is kind of my point, right? So like we all kind of have our areas of expertise. We can all learn something from each other. We all kind of bring something to the table. But I think the kind of trap is that then we apply our success and intelligence in one area to another area where we haven't actually built the kind of requisite we haven't captured that body of knowledge.
Yeah, especially if we're on TV and we're people are watching it. We got a big audience. You start to feel really confident about what you're saying, and then that does lead to making predictions in other fields. But let's just go back a little bit. Like people in the investment world, like you and I, are educated. A lot of really, really smart people with very specific education in finance. And so like that leads to being able to, the thought process like, hey, I can make a prediction in finance, but that doesn't even work in their education field or their field where they're educated.
Right. It's just like, it's these things that contribute to overconfidence. We want to believe we can do something. We want to believe that we have the skills to do something. And it's not to say that you can't get to that point, but you have to be honest with yourself and say, okay, I'm an expert in this, but am I actually an expert in this other thing? And that happens time and time again when it comes to investments, is you feel like you can apply your knowledge and intelligence from one area of life into this area of life, and it's going to translate.
Let's see what we got next. I think this is almost over.
I don't feel like $1 million in the metaverse, but that's not enough to get the stock moving. I have so many. People should be buying this stuff. This is so for real. Yeah, let me say this. I made a mistake here. I was wrong. I trusted this management team that was ill-advised.
So that metaverse example that they just went through right there is another really good example of, to me, like, all right, we got to get it right on the front end. So we got to know when to buy something, and then we got to know when to sell it. And those two things are really, really hard to do. And could you imagine if you had bought the stock, like when the prediction was made, you sell it at the bottom, and then something else, then it skyrockets like after you sell it? I mean, it's just you're just constantly looking in the rearview mirror, kicking yourself.
Oh, for sure. But I mean, if you kind of look at that pattern, and the temptation to kind of invest in that way, you can see it's directly connected to emotions again. And when it comes to prudent investing over a long period of time, we have to separate out our emotions from what's rational. We have to look at whatever evidence we can get our hands on and see and observe how markets have worked in the past to make an informed decision about how to position ourselves for the uncertainties of the future.
Look at you taking this all
But if we
serious.
allow them, well, because it's so true, and it's just like we're human beings.
Yeah.
We are as investors, we're plagued by emotion. And if we allow that emotion to lead our decision making, it is more often than not going to lead to a poor result.
Yeah. And it's easy for us to look into the future using historical data and say, hey, why wasn't I in this? Or I should have done this. But whatever happened in the past doesn't mean it's going to happen in the future. And essentially, with all these predictions, that's what we're trying to do, is predict the future. And we all know that's impossible to do.
That's why in what I just said, I mean, as investors, we take this evidence in not so that we can predict what's going to happen next. We take this evidence in so that we can position ourselves to navigate the uncertainties of the future.
Look at that. Can we put that down in quotes or something somewhere?
You'll probably hear me say it again
Yeah.
at that point in time.
I like it. Well, Jake, look, we're at the 28 minutes here. I really appreciate you having some fun with me on this one. I know I threw a curveball at you, but you did well on the fly, so I appreciate that.
Yeah, no, it was fun, and I guess we can all just probably not tune into Jim Cramer.
Well, I mean, you can for entertainment purposes. How about that? But let's not get our investment advice from Kramer. How about that?
I think that's a good way to end the show.
All right. See you, Jake. Have a good day.